Wagwan YouTube. Or should I say, as we say in Nigeria, Bawoni. It's Yoruba. But Bawoni. It's David, aka Saucy Day, back with another Road to Six Figures. Yes, Road to Six Figures. We're not stopping. We got our eye on the prize. We got it mapped out. We playing chess, not checkers. We focused. We staying ready so we don't have to get ready. Eye of the tiger. All right, let's focus. All right, so week 11. I know this one, when this is getting put out, it's a little late as compared to when I usually take it out, but this was a very productive and hectic week. So it got pushed a little bit, but bear with me. We will be back on regular scheduled programming for week 12. So you don't have to worry about this becoming like a thing that's going to happen a lot. And for this one, boom, we starting NQ. As we know, Nas 100 Futures, June 2024. If I do say so myself, E-Mini. And you're probably wondering why on the side I only see one instrument. It's because I realized through these past couple of weeks when I really did some review that when I would trade during the day, like during my session, I realized that like I would miss a lot of trades because I would go from one to another. So I would go from oil to Nas, back to oil to Nas. But the issue was that I was missing all the right plays and I was taking all the wrong ones. So what is the point of me trying to like catch all of these setups when I'm not even catching the right setups? So I realized right now what's more important is to zone in on one. Nas gives moves practically every day, like based on what I've seen. So when one or two things happen, to either like Nas is not throwing out consistent moves, which I don't see that happening, but anything can happen. And two, I get super consistent with Nas, where I'm like productively like smashing it. I don't need to add anything else. I don't need the DXY and NASDAQ. So I just wanted to make that clear before we got into this video. But let's get started. Monday, March 18th. Okay, as we can see, price is cutting through 200. 200 is cutting through price. Go to the 15 minute. 200 underneath at 50 shooting up. We like to see that. As we can see, let's get it. I know. Great move. We had a high probability 5-minute demand, 50. When you see this this is like we love to see this. Break a structure. We had a break a structure to the top. We had a high probability zone. This was everything, and 200 flown on the bottom, 50 right at our zone. And as we can see, price came down, touched, came back up. I know that was a little spiky. Came back up, got us in, and I got out. For my 1-to-1, got 95, caught 95 from that. Amazing move. 95 ticks from that. I realized this is another thing that I'm gonna like make sure that I might or might not drop a separate videos. It might not really be needed, but you can literally calculate like your risk management so easy with futures. Like literally you see those points in the middle, the 95, like the 95 right there in the green, and the 83 where it says in the red. Those are what you need to pay attention to. Everything else, don't even worry about it. Pay attention to that, and whatever that instrument you're trading, however much it is per tick, you just multiply that by the instrument's price, which would for NASDAQ be 5. So it would be 95 times 5 or 83 times 5, and whatever that amounts to is whatever like you'd get as a reward and whatever you'd be risking in that trade. And then whenever you want to just add another contract, obviously you just 2 contracts of NASDAQ is 10, 3 contracts is 15, 4 is 20, and then you just do 20 times. Boom, you got that. See? Yeah, I know you're like, wait, hold on. That's big moves for sure. But we building. So let me start. No, I know the intro has been very long, but let me start. I just wanted to really let you guys realize, like, futures is the future. All right. Let me bear with me. We just gonna let that pass, but let's lock in. So that was my first trade Monday, March 18th, and I think that was my only trade, if I'm not mistaken. Yeah, that was my only trade. I didn't force nothing else. So now Tuesday, as you can see, I know you see 2 X's there. We don't like nothing with X's. Yeah, we don't like to mess with no X's. But yeah, so boom. All my X's come from Texas. All right. Let's lock in. I don't know why I'm doing this. So boom. 1 hour, we see a 200 flowing on top. 15-minute, 200 cutting almost through price and still above though from where we're at. And then 5-minute, as we can see, 200 above. We have the 50 SMA coming right next to our zones. And to me, I thought this was beautiful. It was low probability. However, like I said, it looked very beautiful to me. It had been dropping for some time. I think we had received, like, the US had received, if I'm not mistaken, good news this whole day. But as we can see, it broke, came a little bit into profit, and then knocked me out. And then once again, I tried to take a 1-minute demand, which I have to be. You know what's so crazy about this one? I was deep in profit, but I try to hold for longer, if I'm not mistaken, and for over a 1-to-1. And because I try to take it up to this supply right here, it didn't end up working. Came back, knocked me out. Yes, I know. I learned my lesson. Gotta be smarter. And with that, I realized it's good to go for, like, if you're doing 2 contracts, right? You want to make sure that you, no matter what, set your first contract. You set your first for your yes, this is what I wanted to say. For your 1-to-1s, if you're using 2 contracts to replicate twin trading, which we would do in Forex, we use 2 contracts instead, right? So to get out of 1 contract, you put, if we're heading up in a buy, we would put a sell stop, and if we're heading up if we're selling, we would put a buy stop to take that 1 contract out, leave another one running. So that's what I should have done in this situation. However, I did not. I left both contracts running. They came back on me, and I learned my lesson. Like I said, make sure you use your stop losses. They will save your life. They are there to protect you, not to take away from you. So that was Tuesday's moves. Let's go back to the 1 hour. Let's go back to the 1 hour. We see 200 come through price. We see a 1 hour high probability demand. I think this was an H4 supply. So with this one, my fault. This one, as we can see, 200 was coming through. 5-minute liquidity grab I try to take from right here, because it never finished below. It just grabbed all of this liquidity right here, and it was a 15-minute demand. As I'll show you, this was the 15-minute high probability demand, and You know what I'm saying? Like it struggled at price for a little bit. And I think with this one, what ended up happening? I took this breaker candle. Yeah, and it knocked me out. You see, just by a little bit. I know it's crazy, right? And then it ended up showing up. That's really crazy, actually, now that I think about it. And it ended up showing up. And I knew it was still at price. We see the 200 coming right back down. I was like, no, it's just going to do another liquidity grab. I was still confident in it because the 200 is cutting through price. When the 200 is cutting through price, that's typically when we want to look for liquidity grabs. So I understood that fact, and I was like, okay, this looks like an amazing setup to take. I got in on the break a candle right here. I know we seen a little drawdown, but I wasn't gonna let it beat me. You feel me? So boom, I was good. Took it up here, and I profited on Wednesday, March 20th. So now let's go to Thursday. This is where it gets a little hectic. So Thursday, as you can see, we had 200 clearly on the bottom, which shows us amazing bullish intention. 5 minute. Price was very high, by the way. Very, very high. So I caught a 1 minute demand. I'll show you guys that right now. This was the 1 minute demand that I caught right here. I know you're probably like, what made you catch that? I just really liked how it left this area. And I've been realizing that you can catch good moves, really nice moves off the 1 minute as well on Nas, not just the 5 minute. Like sometimes it'll miss the 5 minute zone and it will take off from a 1 minute zone. So occasionally I prefer 5 minute zones. However, if there's no 5 minute zones being given, I may glance at a 1 minute to see, okay, is it trying to make a 1 minute move or not? And if it makes sense, I'll take it. If it doesn't, I'm good off it. And this situation made sense for me, and I profited. Then we go back to the 5 minute with this one. Try to take it back down. As we can see, price was super high, super duper high. And if we're not mistaken, see, it liquidity grabbed on the hour, and I can see that, and I can see we were super high. We've been pushing bullish for a minute. So now I see it clearly left a high probability zone to break a structure to the downside. So showed intention, came back up. 50 SMA running through price, which gave me an indication that okay, it can initiate my direction back to the downside, which I always understand. And with that being said, oh yeah, right here, as we can see, took the break of structure, but it ended up, yes, what ended up happening is, if you take notice, this is what I'll be talking about. It came back to a 1 minute supply zone right here. Let me show you guys. I'm getting a little, now that I'm only trading one, I can get a little bit more detailed in my explanation. It came back to the 1 minute supply, as we can see. I already had taken my 2 trades for the day, so I seen this and couldn't really do nothing about it. I like to stick to my plan. Your plan will save you. Stick to it and grow it, and it will bless you too. So, but however, if I would have taken this move, you would have taken this break a candle and never came back up here, and yeah, you would have been good. But we win some and lose some, as long as the outcome is income. So now let's go to Friday. Friday wasn't my best day, but you know, you have those moments. Even the greats go through hard times. So as we can see, the 200 flowing on the bottom on the hour, 200 come through price on 15, on the 5, the 200. You always want to make sure you know what structure is doing, and your EMAs are really big for me because they give you clear indication of where the market is going, and they're a little laggy as compared to live price action and structure. However, like, it does give you a good indication. It's like a good way to, like, it's like added. it adds to your confluence. So as you can see, I still saw the 200 up top, but I seen that, okay, like price is getting ready to reverse. We got a break, and I ended up, what happened? Oh yeah, I tried to take this. I don't know why I counter trended. I think it was because I thought New York was ready to reverse, if I'm not mistaken, and I think news had came out bad for the US. However, like as we can see, it had no effect. I took the break a candle, and it came back, smacked me out. And I took yeah, and it was with a 1 minute break a candle too. It was the 1 minute and the 5 minute was in alignment, but it happens. This is why you gotta have proper risk management. And then once again, at this point I try to take the supply, but Lord behold, it finally wanted to make its move back to the upside. As we know, Nas is usually bullish more than it's really like selling, more than it likes to sell off, and it ended up respecting right here. Ended up respecting this high probability buy area. Listen, this could have went my way and it could have went that way. You know what I'm saying? Like, and it just happened to really initiate using with the buy. Could have taken it from right here, and that would have been a winner. You know, you have days like that, but that's why my fault. That's why I believe risk management is so important. Risk management is so important. You have to know risk management. You have to pay attention to it, and you have to take it into account. Without being said, biggest thing I learned was really how to calculate my points, like how much like I'm risking now, like in these trades, so that like I know if it's smart to like get out early, if I can hold them much longer. Like it was helpful. Beforehand, I was really just like eyeballing it, which wasn't the best strategy, because like I told you, like 2 weeks ago I was cutting so many winners, like so many moves that should have been winners. I was cutting them really early, and that was my bad, and I realize that now. So now that I also know how much I'll be risking, I can decide, okay, if I should just do 1 contract or 2 contracts on certain specific moves. So that was the biggest thing, and I think that's a great thing to understand when it comes to trading futures long term. Without being said, I hope you guys learned something. I hope you guys got some education from this. If there's anything that you guys are curious about, want to know, comment below, leave a like, share with your friends, and let's get on this road together, man. Let's make this happen. Let's get better together. Let's develop this skill that will make us profitable for the rest of our lives. You know what I'm saying? At the end of the day, we try and do this for all our own personal reasons, but we can make it happen, and we will make it happen. And you'll see it. Without being said, saucy out.